and welcome everybody. As what strategies I am trading now and going into the new year, just give you a little bit of perspective and a pause here as we get into the new year. So we'll talk about a few different things today. Again, welcome everybody. Happy New Year! Last day of this year. Today is for educational purposes only. Just before we jump in here, just let you know a little bit what's going on. Many of you have gotten an email about this, but this is our last day. Usually in December, we run once a year, we run a mentoring sale, and just kind of a reminder, today's the last day. So just real quick on this, just to remind you, last day for mentoring sale is $3,600. It's 12. We've kind of tweaked it. It's 12 weeks. 12 mentoring sessions, and you can do it with one of the myself, Jay, or Mark. We're going to be covering a plan with you, but you'll be covering about 30 to 35 live trades with your mentor. And you have any email interaction with your mentor between sessions on your live trade. So this is a 3-month, at least a mentoring part of it, to get you going in the right direction, get you doing this. And again, we do mentoring very uniquely with following this trading plan, and we're trading these trades with you. The goal is to get you more independent. And then basically the 3,600 is just for the mentoring sessions and the interaction between the sessions, kind of gratis things you get for 3 months with it. You'll get the Traders Lounge and opening bell sessions with Dan and Mark. And those are a couple hours every day that are recorded. And those are basically each day, what are we doing in live trades? You also get gratis trading groups each week. About 3 hours of trading groups, one with each mentor. Mine's on Thursdays with mentors and the veteran students or all the students in the community. You get that for 3 months. And you also get the first 3 classes of the year for our online classes, January class, Feb, and March. And you get access to all of our 2020 classes for 3 months. So just to throw that, just because it is once a year we do it, and today's last day. If you're interested, I would at least contact Johnny by phone or email today to at least lock in that price and that package. We won't have anything like that for the year, and I think that'd be a great once a week. You can make a lot of progress helping you as a trader. So. Just to let you know, 2021, our first quarter tentative classes, at least as of today, these are the classes that I'm looking at covering over the first 3 months. Again, seeing how the market does, I always keep the flexibility to, depending on market conditions, I may tweak one or do one at a certain time. And as we get into next week, the first class starts a week from next Tuesday. I'll decide kind of next week which one I want to start with, or if I want to tweak one. But it's typical. We do 3-week classes, 1 class per month. It'll be $297. We go twice a week, and they're recorded, and they're usually about an hour each, and all recorded and archived. All right, before we jump in, I think there was a question. Are these sessions at set time that are one-on-one? Usually what we do in the one-on-ones is we just set up, that's the only time we need to be with you live. The rest of the time it's recorded. You can watch when you want, but the one-on-one sessions are set up around your schedule. For a lot of people, it works to do the same time each week. If your schedule's frantic, we can work around it, but ideally, it seems like more people want a set time, and so we try to accommodate that, or if they need more flexibility, but we usually work around your schedule the best we can. All right, well, let's jump in and talk about, I'm going to start out just for a little bit of perspective, 30,000 feet up in the airplane, just to review where all this stuff fits in. When we look at a complete options portfolio, we just look at running an options portfolio without stock. Right? Because it costs a lot. Nothing wrong with stock. Plenty of our students have stock. But so we would break in any trade you do with options, we would throw in, or any trade you do, we would throw it into one of these 3 parts of the portfolio. The long portfolio, which would be a neutral to bullish perspective. And those would be strategies like long stock, covered rights, cash secured puts, and then long leaps. And then these are two that we've been doing hot and heavy the last 3, 4, 5 months. Put credit spreads. And also we do a lot of wide put credit spreads, which are a much cheaper, better yield alternative to cash secured puts because you don't have to put up the stock. And then long diagonals, which are a much cheaper, better yield alternative to covered rights. So those would be ones we're doing. The one we're going to probably talk a little bit about today is a put credit spread. But I'm going to talk about one in SPX today, but you can do cash secured put alternatives in stocks. And they're very effective, much higher yield. Income portfolio, range bound perspective, iron condors, calendars, butterflies, double diagonals. The one I want to talk about a little bit today, which has been our kind of maybe number one strategy over the last 3 months, has been a calendar. But obviously any of these have worked real well the last 7 weeks. Why do you think any range bound strategy has worked well the last 7 weeks in the SPX? Why do you think? Why do you think? All these range bound strategies have worked wonderfully the last 7 weeks. Aha, Maurice got it. We've been range bound. We've been range bound, right? And the volatilities have been relatively stable. So calendars have worked well, but any of them have worked well overall. And then the spec portfolio, which is more a directional perspective. And I'm going to talk about today a little bit GLD bullish butterflies. We've been doing quite a bit of those. Tesla, a lot of people have been in that long verticals or diagonals, back spreads, directional butterflies and calendars, long options, long verticals. There are various ways people put on directional trades. And so this is kind of 30,000 feet up perspective, kind of where we fit stuff in. And, we might do really what a portfolio might look like is a lot of students might do, 1 to 2 trades from this part of the portfolio per week, maybe 1 or 2 from this part of the portfolio. And, spec is more when an opportunity arises. So anyways, that's the complete options portfolio. So today I'll just talk a little bit about, 3 strategies trading now and looking at the new year. Calendars, put credit spreads, we're doing these bullish butterflies and GLD. Mark Fenton, who has been with me for a long, long time, has kind of spearheaded this one, and it has worked out real well because gold has been rallying the last months or so. And as you can see here, we'll just look real quick here. I think I'm going to bring up Thinkorswim, and let's look at the last 7 weeks. We'll look at the SPX as well as some of the key volatility indicators. Let me just bring that up for a second. So you can see, obviously, in SPX, the last 7 weeks, well above the 50 and 200 and just very nice range bound, maybe slightly trending up, but just, and again, most of the time it is range bound. Even in the year we've had, this is a 1-year price chart in SPX. Here we have range bound, then we have the big correction, right? And then for the most part, kind of range bound, working its way up, but very nice for range bound income trades, a few bumps, but mostly range bound. And I think that'll continue for next year. I mean, you probably have next year 1 to 3, 1 to 4 down moves of 3 to 4%. A few of those may turn into more, but yeah, it's a typical year. If we look at this charts and we look over the last, if we put in here time axis, well, I'll just put 30 days so you can at least get the feel, but you can see, or if I put, maybe it's better if we see 90 days. 90 days. and you can look at SPX. And, we had some volatility here, but the last 7 weeks have been pretty steady in the SPX, right? If we put VIX up here, which is a volatility metric for 30 days, you can see the last 7 weeks, we had, as the market went down in early November, VIX went up, but for the most part, it's been, you could see that very steady, slightly decreasing, but that's been the last 7 weeks. That's the VIX. So that's for, if our durations are closer to 30 days, I may use VIX. We do a lot of short-term trades, so I'll look for short-term trades, the VIX 9-day. And again, similar, you can see vols are pretty stable, slightly trending down for the last 7 weeks. And if you're going 45, 50 days out or more, right, then you could look at the other one is the VIX 3M. If you're looking 3 months, we don't do that much 3 months out, but again, it's giving you similar, similar stuff there. All right, let's go back to so 3 strategies we're looking at: calendars, put credit spreads, and butterflies. So we'll just take a quick look at that. Again, you can see SPX 37, about 31 today. VIX is kind of the lower end of the range, not exactly, but lower end of the range. The range has been overall the last 3 months, we've been looking at maybe 20 to 21 on the low end, 28 to 30 on the high end. ATR, which is, that's been trending down, and that's just more. ATR measures the high and the low each day of SPX, and so you can see it trending down. It just means, you look here during the correction, you had a lot of these big candles, so a lot of movement, which makes it tough to handle these range-bound trades. But the ranges have been really nice and narrow the last 7 weeks, so it's been very much more manageable for these trades. I mean, I do expect, and many people expect, the volatility to pick up in January. Doesn't mean we won't be range-bound, but I would bet we'll get more movement in the next 4 weeks than we've had the previous 7 weeks, which has been very range-bound. So here's a trade that has been just doing fabulous, right? Over the last many months. But the calendar, and here's just a typical example of how we do it. There's an SPX 15-day calendars. We do calendars anywhere from 7 or 8 days to expiration of the short. But we've been doing, especially lately, some calendars where the shorts are 21 to 30 days out. Have been working well too. And volatility's been stable. Really hasn't decreased that much over the last 6 weeks. So in a range-bound environment without volatility going down much, been very good for calendar. So here's an example of one with SPX at 37.30, buying a 37.30 in Jan 22 and selling a Jan 15 37.30. So, the last weeks or so, we've been doing quite a few calendars where the distance between the long and the short is about 7 days. And this calendar would be going for around $11. And if you look at the expiration break-even lines, where this is the graph today, this is the graph at expiration, you can see, what's nice is you get about 70 days or 70 points either way protection. And on a 15-day calendar, maybe we're looking to be in it maybe 3 to 4 days at the most. So, the probabilities of moving outside these break-even points on a 15-day calendar in 3 or 4 days is very low, right? So, again, we get it. But that's been an effective strategy. We have plenty of adjustments. Once we are in the trade, we will turn it into at least the last 6-7 weeks, mainly because it's been range bound but slightly going up. We would turn, if we needed to, turn a single calendar into a double. And again, we got plenty of the classes and the programs get a lot more detail on that, but that's been an effective adjustment. It not always is, but the way the market's been the last 6 weeks, that's what we've been doing, is turn it into a double calendar, and that adjustment has been more on the upside. So this is a 15-day calendar. And then another trade we've been doing is a little bit more further out that has been extremely effective, is about a 21-day SPX put credit spread, where we sell usually sell a put out of the money, generally at about a 20 delta. So you're pretty far out of the money, but you're getting a decent credit, and then you can buy a put 20 points underneath it. Now the distance between the short put and the long put, the width of the spread is 20. If you're a smaller trader, you can do the width of your spread, you can make it 5 points, or you can make it 10 points. It'll be a much cheaper calendar. This credit spread is about 1,700. If you do a credit spread where the width of your spread is 10, then you could put on a trade for about $850 or a little bit more than that. If you want to do 5 wide, distance between the long and the short, that might be a $300 to $400 trade. So if you're smaller, you can do that. But these have been extremely effective. What I like about these is you're basically delta neutral. To me, in a $3,700 vehicle like SPX, to be within 1 or 2 deltas long or short at the beginning is pretty delta neutral. And you have a strategy that this would be from the long portfolio, but you don't have as many long deltas as you would like a covered right or a long diagonal. So these are I think a very conservative way to play the neutral to bullish trade, and is basically delta neutral. So we do a lot of these, and again, we've done classes on these, and we'll continue to teach on these. Very effective strategy. And then the third one that we've been doing a lot, and this is more than just the last month, and this is Mark, as I said, Mark has spearheaded this. You can see in the speculative part of the portfolio. So we talked about the calendar, that would be in the range bound income part of the portfolio, the credit spread, which would be, I guess we would put it in the long portfolio, neutral to bullish, and then this would be a little more spec. And you could see, gold was beaten up here pretty good for a while through the beginning of November, and then it's been stable or basically up since, right? And so the last, I would say, good month and a half, or a little bit less than that, these bullish butterflies have worked wonderfully. And this is just giving an example of the type we would be doing. So like as of today, with gold at 177.80, might go out to January 15, which is a couple weeks, and maybe sell a strike about 3 points up, the 181 calls. And again, a butterfly is simply a combination of a vertical debit spread and a vertical credit spread. And it's just a cheap way, it's probably one of the cheapest ways to play direction in a cheap stock or an expensive. It's much cheaper than a vertical trade or a long call. And you could still make a great yield, in most cases, a much better yield. So you can see here, with us at about 178, I'm selling the 181 call. I'm buying the 186, and then I'm buying the 176. So there's 5 points difference between these. And the butterfly is $1.34, so $134 for every one contract. And you have a pretty wide area here, 176 or so, all the way up to 186. And you can see in that area, that's your profit curve. But it's very forgiving if in the first, if this is like a couple weeks, your first week or so is forgiving if it goes outside the profit area. So this is one of the more forgiving speculative trades that you can do, much more forgiving than a vertical or a long call. And so, pay $1.30 on these. I would be looking at least minimum 30%. So, if I pay $1.34, I'd be looking to sell it up near $1.65, $1.70. Different type of trade, but these are the types of trades we've been doing. Pradeep has adding a couple to his questions. Is there any advantage of doing these adjustments? Or I think he's going back to his question on adjustments for the calendar trade. Again, we trade mostly SPX. If you're a smaller trader, you could trade SPY. They're the same vehicle. I think SPX is, you can do less size, so you're going to spend less on, even though everybody says no commissions, there are still commissions, right? They just call them fees. So Johnny Schenkel will have the presentation with the slides. I think he'll send that out to you, or he'll post it on YouTube, or he'll do something like that. So they will be available. But anyways, just a little quick webinar today on what we've been doing, kind of what we're looking at as we're getting into the new year. And but if you're interested, again, mentoring sale today is the last day on that. I'd at least give Johnny a call or email him if you're interested in locking in this for this price. So anyways, thank you, everybody. If you have any other questions, you can email me, dan@sheridanmentoring.com. Look forward to working with you guys and navigating through the markets for over the next year. And I appreciate you guys coming in and joining us today. Have a nice New Year's Eve and a nice our last holiday weekend here. Have a nice weekend. Thanks, everybody. Appreciate it.